Today we are discussing in this session swaps. If someone asks you, what is swaps? Simple meaning of swap is exchange. In investment banking, we hear terms like interest rate swaps, credit default swaps, then there is equity swaps. But when we try to study them, how they operate, we are loaded with lot of information. There is a proverb in English, too much analysis leads to paralysis. That should not happen. Simple चीजें simple ही होनी चाहिए. Swap is a very, very simple topic. As I told you, swap is exchange. In investment banking, if I say exchange of what? It is exchange of cash flows. Let's understand it with one of the swaps which became very, very popular in the year 2008. And it is anybody's guess. 2008 reminds us of Lehman Brothers subprime crisis. And the swap which I am first discussing with you is CDS, credit default swap. So I'll like to introduce you to that. What is credit default swap? And why it is called very, very important swap in the history. Please understand this. This starts with simple economics. And let's understand that. You are having large amount of money. So you will definitely have good expectations to invest such money. And expectations will be what? Higher returns. Now, all of us are aware of the finance principle. High returns means you have to take high risk. And if that is the case, then naturally where I am investing, uska credit rating will not be high. Credit rating will be little low. So basically, expectations of stakeholders change the entire game. I wrote here swap, in that I wrote credit default swap. I want you to understand that when I'll be operating that swap, why it happens. So uska pehla reason, your concept should be very clear. The main reason of credit default swap happening is high expectations of stakeholders. उनका expectations बहुत ज़्यादा होता है. They don't get convinced with normal returns. And when you are under pressure to invest their money in high returns, naturally those companies cannot have AA credit rating. Because AA credit rating companies will not give you high returns. They don't need money. उनको तो money ऐसे ही आ जाता है. So they give lower rate of returns. ये principle हमेशा ध्यान रखिएगा. High credit rating will offer you low returns. Low credit rating will offer you high returns. So first I want to make that clear very well. I hope you understood this, and I'll move further from here and take it for further discussion. So all of us know this now, that credit default swap, first thing is that where stakeholder expectations are very high. Their expectations are very high. You have to put money in double B rated company by credit rating obviously, and not double A rated company. Double A rated, or you can say double A rated company. ऐसा क्यों? Why? The question that will come to your mind is why? Because please remember, higher credit rating, they will not be able to give you higher returns. So first point in your mind should be very, very clear. Stakeholders' expectations are very high. Your investors are expecting high returns. So what you do is, you are putting your money in double B rated company and not double A rated company. So this much is very clear, I hope, because I am going concept by concept. Now what happens here is, we move to the third point. And the third point is that high credit rating, like as we said, double A, will give low returns, and low credit rating like double B will give you high returns. Now, can I say double C or D? Please remember this. Don't jump in the well with the searchlight. क्यों कूदना है कुएं में? डी यानी तो जंक हो गया, वो डिफॉल्ट करेगा, उसमें थोड़ी कोई पैसा इन्वेस्ट करता है. एंड डबल सी, ट्रिपल सी, यू कैन ट्रस्ट. सो आपके पास ऑप्शन दो ही है, ये ध्यान रखिएगा, आइदर डबल ए या डबल बी. डबल ए, बी प्रिपेयर्ड फॉर लोअर रेट ऑफ रिटर्न्स, डबल बी हाई रेट ऑफ रिटर्न्स. So first point was what? Stakeholders' expectations. Then you go to double A, double B. The third is high credit rating, low returns, low credit rating, high returns. But now what happens is, you will go to company which is double B, and they will say, okay, fine, I am giving you 8% to 10% returns. So what was double A offering me? 4 to 5% returns. फर्क देखिए, आपको एक कंपनी 4 दे रही थी, 5 दे रही थी, दूसरी 8 दे रही है, 10 दे रही है. एंड यहाँ तो अमाउंट यानी ये 50-100 करोड़ की बात नहीं हो रही है, कम से कम 1000 करोड़ की बात हो रही है. वी आर टॉकिंग अबाउट 1000 crores. एंड वेन यू आर टॉकिंग अबाउट 1000 crores, इमेजिन 1000 crores पे मुझे कोई 5% देगा और कोई 10% देगा. 5% what will I take home? 50 crores. And 10% I'll take 100 crores. Why will I shift to 5%? I will go to 10%. Double A bye bye, double B welcome. अब वेलकम में प्रॉब्लम क्या है ये भी बताता हूं. वेलकम, फाइन, हैप्पी, होम, बट गुड नाइट स्लीप विल नॉट बी देयर. क्यों? क्योंकि आपने डबल ए जो हाईएस्ट सेफ्टी है उसे छोड़कर डबल बी के पास गए हो. यू हैव इनवाइटेड लिटिल बिट ऑफ ट्रबल फॉर योर सेल्फ. वो ट्रबल क्या है? डिफॉल्ट. डबल ए chances of default are as good as 0, ZERO. Double B chances of default are, double B can become double C. Byju's was double B, it became double C, it became D. तो फिर नींद तो नहीं आएगी, डिफिकल्टी होगा. प्रॉब्लम्स आएंगे, नाइटमेयर्स भी आएंगे। 1000 करोड़ दे दिया, 10% में दिया, बॉस खुश हुए, 10% 100 करोड़ होता है साल का। बट इफ दिस डबल बी goes down, double will also bring trouble. अब क्या करने का? This is where credit default swap comes into picture. तो हमने क्या सीखा अभी तक? We understood that there is high expectations of shareholders, stakeholders. मैं हमेशा शेयर होल्डर ही बोल देता हूं, स्टेक होल्डर्स, इन्वेस्टर्स। इसलिए आपके पास ऑप्शन दो है, डबल ए एंड डबल बी। डबल ए लो रिटर्न्स, डबल बी हाई रिटर्न्स। नाउ यू गो फाइनली टू डबल बी बिकॉज डबल ए इज गिविंग लो रिटर्न्स, एंड फाइनली यू डिसाइड टू गो फॉर 10% रिटर्न्स, पार्क 1000 crores, एंड डबल ए इज ऑफरिंग यू 4 or 5, सो आपने उसको सॉरी बोल दिया कि नो, बस हो गया अपना, वी कांट, नाउ वील मूव फर्दर। आई होप दिस मच इज क्लियर। See, actually you should have that clarity in your mind. That helps you a lot to understand CDS. Now the fifth point. Fifth point is you will be worried to protect your capital, which you parked with double B rated company for 10% returns. So now here what happens is you'll require a solution. You need a solution. Otherwise, this point is continued still. Otherwise, you will not get a good night's sleep. Solution कहाँ से लाऊं मैं? Solution एक ही है कि अब मेरा पैसा कौन मुझे सिक्योर करके देगा? Who will help me? This is where credit default swap comes into picture. अब मिलेगा सॉल्यूशन। 6th पॉइंट पे सॉल्यूशन मिला। जैसे क्रिकेट मैच में 6 बॉल होते हैं, क्रेडिट डिफॉल्ट स्वैप में भी 6ठे पॉइंट पर ओवर खत्म हुई, सॉल्यूशन अब मिला। देखते हैं सॉल्यूशन, लेट्स अंडरस्टैंड इट। This is where I want you to understand this. There is pension fund who have 1000 crores. They put money with double B rated company. This we call it parking the money or investing. What will double B rated company give them? आपको पता ही है, 10% returns. So here the thing is 1000 करोड़ जा रहा है, 100 करोड़ आ रहा है, but we have to see that 1000 करोड़ is safe. That's very much required. Our 1000 crores should be safe. If they are not, then what is the use of investment? Then where is CDS? But first understand this, that there is a pension fund which has a money which it is putting with a double B rated company which is assuring 10% returns, and money going in is a large high ticket amount, 1000 crores. And returns promised are 10%. But only catch line here is it's a BB rated company. I hope this is very, very clear in the chart form. I'm going to modify it again, I'm going to draw it again, I'm going to make it understand. मुझे एक ही इसके अंदर you should be able to understand it and take home the concept of CDS. हमारा पर्पस ही वही है. So you understand it very clearly कि ये हो गया CDS. You are already into operating mechanics part. कि आपने 1000 करोड़ इन्वेस्ट किया, 10% रिटर्न आ रहा है. आगे देखते हैं. Now see what happens here. There is a pension fund, and then there is a BB rated company. I am again drawing it for your understanding because I am now going to play the credit default swap. ये जा रहा है आपका 1000 crores. And how much is coming in? 10% returns. This is returns. Your worry is your good night's sleep is disturbed because you have invested in a BB rated company. So now you approach another company. For example, I would say a company which has a higher credit rating. It's just an example, because obviously if somebody says that I have taken a loan of 10 crores, you give me a guarantor should have money more than 10 crores, तभी तो वो गारंटी देगा ना. वो गारंटी कैसे देगा? नहीं तो मेरा आर्ग्यूमेंट हमेशा वही रहता है. अगर मैंने 10 करोड़ का लोन दिया है और मैं किसी को गारंटर लेके जाता हूँ तो उसके 10 करोड़ तो मिनिमम होना चाहिए, उससे ज़्यादा होना चाहिए, तो मेरे से बड़ा आदमी होना चाहिए, तभी तो वो गारंटर बनेगा. सो ये ध्यान रखिएगा, BB रेटेड कंपनी का गारंटी कौन दे सकता है? BB थोड़ी लेगा, नहीं तो डूबेंगे तो साथ में डूबेंगे, हम साथ साथ हो जाएगा. BB का गारंटी AA लेता है, ये ध्यान रखिएगा. तो आई टुक अ इनिशिएटिव ऑफ अप्रोचिंग अ AA रेटेड कंपनी. आई टोल्ड देम, सर आई हैव इन्वेस्टेड 1000 crores इन अ BB रेटेड कंपनी. ये सब कौन कर देगा मुझे? इन्वेस्टमेंट बैंक. ये ध्यान रखिएगा. स्वैप इज नॉट डन बाय रिटेल बैंक्स. दीज आर ऑल इन्वेस्टमेंट बैंक जॉब्स. दिस इज द रीजन व्हाई इन्वेस्टमेंट बैंक्स डिमांड इज फैंटास्टिक. द वे द जॉब्स ओपनिंग्स आर कमिंग. And all of you know one of the videos I've discussed also. Morgan Stanley has put in 16 floors on lease, taken 16 floors on lease with a 15.89 crore rupees rent a month, 2100 crores for 10 years lease. So coming back to this pension fund, if you see here, goes to AA rated company and tells, अब क्या करें? AA rated company says, don't worry, we are there. We are very much there with you, and we assure you that we will protect your capital. We will guarantee you that we will verify their books, we will check everything, and we give you a guarantee that we protect your 1000 crores. But free में थोड़ी होगा. You give us premium. Let's hypothetically assume that premium is 1%. So your gross return is 10% coming from BB, and net return is 10% minus 1% given as fees to AA, So your net return is 9%. अब यहाँ ये समझते हैं क्रेडिट डिफॉल्ट स्वैप कहाँ है. इतना बड़ा टर्म हमने आपको बताया, ये हो गया. अभी समझना यही है. When BB rated company gave you money, that was investment of 10%, means you have made, BB rated gave you money of 100 crores. 100 crores कैसे? 1000 crores का 10%. And how is the swap operated here? Look at that diagram between pension fund and AA rated company. Pension fund has been given a guarantee of 100% cash flow by AA rated company, and what pension fund has given to AA rated company in exchange? 1% premium. 1% premium. 10 में से 1% वो शेयर करेंगे. So 9 हो गए. So what is a swap here? Swap is between pension fund and AA rated company. AA rated company is protecting your capital. In exchange, you are giving them 1% premium. In exchange, कहाँ से शुरू हुआ था हमारा लेक्चर? Exchange. Let's go further now here. Try to understand this. Why then we did not directly go to AA? AA हमें 4-5% दे रहा था, 9% नहीं दे रहा था. Then why AA is giving now? Because AA is getting 1% premium. अब क्वेश्चन में आएगा आपके, if BB fails, then AA will give us 1000 crores. But if many such companies fail which have done with AA, then AA's solvency also comes under problem. हाँ, ये इतना दिख रहा है उतना सिंपल नहीं है. अगर BB फेल हुआ और ऐसे बहुत सारे फेल हुए, then AA will not have that much capital to pay. Then तो उसका भी solvency problem में आएगा. So please remember this. क्रेडिट डिफॉल्ट स्वैप का ये कैच है कि अगर इकोनॉमिक क्राइसिस आ गया, then it's all said and done. Goa gone. It's all over. But if everything is fine, don't worry. You will get your money back. And please remember, when company becomes insolvent, it has not done 100% credit default swaps. Evergrande was the first company of 2024, Chinese property company, to become insolvent. But could it pay everywhere by CDS? No, it never did. See, please remember this. This is a major problem. करते भी ये लोग तो एक दो स्वैप करते हैं. ये जितना दिखता है उतना सिंपल नहीं है, बट आपको समझना जरूरी है. क्योंकि ये पहले होता क्यों है? बिकॉज स्टेक होल्डर एक्सपेक्टेशंस आर हाई. That is the reason why you go to BB rated companies. They give you lower returns. To protect your capital, you go to AA rated company. Then what you do is, you will give them premium. And then you are protected. There may be a question in your mind, how can AA rated company give guarantee of 1000 crores without seeing the books of BB rated company? Please understand, they have the understanding of that company, that is why ये कर रहे हैं. Nobody is related in this कि ओ नहीं दे दिया guarantee. No, that guarantee is given only after they verify the books or they know the inside out. I've seen in many cases even auditors are same of both the companies. Sometimes even they are sister concerns. Are there any regulations not to allow them? No. Why there should be any regulations? Swap is not regulated. Credit default swap is not regulated. I'm going to use certain terms here, so you remember them nicely before I close the discussion. Under our sixth problem solution, I will tell you, subpoint CDS is nothing but unregulated insurance. Second, net returns decrease. Why they decrease? Because net returns decrease because you pay CDS premium. I took in our example 1%. See, if there are multiple defaults, AA will not be able to honor all commitments. Please remember this. This is what CDS is. Again, I repeat. Point number 1, stakeholder expectations are very high. Point number 2, that is why you go to BB rated company for investments. Point number 3, they offer you higher rate of returns. Point number 4, to protect your capital because your safety is at stake, you go to AA rated company, bigger than them. Point number 5, they assure you, they give you guarantee, but in exchange, they take premium. Point number 6, your gross return will be the return given by BB rated company. Net return will be gross return minus CDS premium. So please remember this. Credit default swap कहाँ पे होता है? When AA gives you guarantee and you pay them premium. We call it unregulated insurance. Drawback, if there are multiple defaults, there will be problem. Please understand this very, very clearly here, that economic crisis in the world is never good because it will create multiple problems. होगा, problems बहुत सारा होगा फिर. So please don't allow that to happen. Please don't allow that to happen. Understand this. Understand this. And that's very important. That's very important. CDS, thus, is a solution to protect your capital. Thank you all very much. Now we will discuss equity swap. I told you credit default swap in one of my videos where I told very clearly it's an unregulated insurance. If I have to define equity swap in a layman language, what will I call it? Because we don't want dreaded terms, we don't want to get afraid of the terms. वो सब क्या ज़रूरत है? Simple चीज़. Equity swap, remember that it is landlord-tenant relationship, मालिक और किराएदार का relationship. It's a tenant-landlord relationship in equity swap. There are two parties. One is hedge funds. I've written here. Second is investment banks. Rules of the game are very simple here. Landlord, investment bank है. तो tenant obviously hedge fund ही हुआ. Now, tenant gives rent, but he cannot be the owner. He gets all the benefits, but he cannot be the owner. Investment bank is the owner, receives the rent. But here, I told you the terminology, tenant and landlord. But here realistic parties are hedge funds and investment banks. So here the clarity is, who is the owner? Investment banks. अब किस चीज का ओनर, वो भी तो इंपॉर्टेंट है. ओनर ऑफ इक्विटी शेयर्स. तभी तो स्वैप होगा ना, तभी तो स्वैप होगा. तो पैसा किसका होगा? इन्वेस्टमेंट बैंक्स. तो फिर हेज फंड्स क्या कर रहा है यहाँ पर? hedge funds will tell them, please buy these shares on behalf of us. तो आईबी कहेगा खरीद तो लेंगे, उसके बाद hedge funds will say, we will give you interest, we will give you interest on the money invested. हाँ जी, हम ब्याज देंगे. Let's assume here that hedge funds will pay them interest of 1.80% per year. In credit default swap, we were in India in rupees. Let's travel to US now in equity swap. थोड़ा foreign जाते हैं. Investment banks have agreed for 1.80% per annum receipt of interest. And hedge funds को क्या मिलेगा? Equity based performance. What will they get? Equity based performance. That means one thing is very clear. If there is profit, it will be given to hedge funds. That is called equity based performance. Question ये आता है, loss. In that case, please remember, if stock price falls, hedge funds will have to bear the loss. IB कौन है? याद रखो, लैंडलॉर्ड. तो लॉस कौन बेयर करेगा? hedge funds. So if there is profit, the swap will operate like this. Hedge funds will pay interest, receive profit. If there is loss, hedge funds will pay interest plus hedge fund will pay loss. This is mentioned very clearly in equity swap. Now, please understand here that we are going to put numbers. We are going to put numbers to understand. I want you to understand practically. I don't want you to understand theoretically. I want you to understand exactly how it operates. I'm going to erase this entire, and all of you know that there are two parties now, hedge fund and investment banks. I'll put up the next one diagram with numbers first, so that simplifies this thing. Let's assume that you are going to invest in a stock of Apple. Your money invested will be, principal amount naturally is $10 million. You are going to review your swap 3 months. Interest rate, I already told you, 1.80% per annum, but please remember 1.80% per annum. If I reduce this swap to 3 months, it is 0.45% per 3 months. How? Divided by 4. Divided by 4. Why 4? अब ये 3 months का है ना. So please remember, interest payment will be on $10 million at 0.45%. Now यहाँ पर per annum नहीं आएगा, 1.80 per annum था ना. So 1.80 is for 12 months. So एक महीने का कितना? 1.80 divided by 12, 0.15, 0.15, 0.15, 0.15, 0.15, 0.45. या और सिंपल चाहिए तो 1.80 divided by 4. क्यों? Because every 3 months, quarterly कितना आएगा? 3 months. So here what will happen is, please understand the terminology. Hedge fund will pay IB 0.45% on 10 million equal to $45,000. profit or loss, profit received by hedge fund, loss borne by hedge fund. I hope this is very, very clear. Landlord-tenant relationship, owner कौन? Investment bank, tenant कौन? Hedge funds. प्रिंसिपल अमाउंट अब मेरे माइंड में एकदम क्लियर है, $10 million. हाउ मेनी मंथ्स द स्वैप विल ऑपरेट? 3. इंटरेस्ट रेट 1.80% per annum. Every 3 months 0.45%. Hedge fund will pay how much interest every 3 months? $45,000. Profit then hedge fund will receive. Loss then hedge fund has to bear, pay. Now what I am going to do is, I am going to give you two situations. Apple makes profit, share price increases. Apple makes loss, share price decreases. Let's understand that in that situation, net where we stand. So equity swap का main concept क्या है? Please understand it again. There is an investment bank which will invest on behalf of hedge funds, and then there is hedge funds which will pay them interest. प्लीज ये याद रखिएगा. सिंपल चीजें सिंपल ही होनी चाहिए. डोंट कॉम्प्लिकेट इट. Let's understand this, that we have two situations. Apple goes up by 6%. Apple falls by 4%. It goes up by 6%, fantastic. Profit on $10 million investment is $6 lakh. Hedge fund will be happy and super happy. $6 lakh कमा लिया. But please remember, interest भी तो भरना है. इंटरेस्ट कितना है हमने कैलकुलेट करके रखा है, $45,000. सो नेट रिटर्न्स टू हेज फंड्स इज $5,55,000. वाई? ये पेमेंट है और वो रिसीट है. $6 lakh रिसीव होगा, 45 पे होगा. नेट रिटर्न्स $5,55,000 इफ एप्पल गोज अप बाय 6%. तो स्वैप कहाँ हुआ? यहाँ $6 लाख आया, 45,000 गया. वो गया, वो जाना ही है. 45,000 यू हैव टू कंपल्सरीली पे. इट्स अ इंटरेस्ट पेमेंट. लैंडलॉर्ड टेनेंट रिलेशनशिप, रेंट तो देना ही है. कम टू द सेकेंड. एप्पल फॉल्स बाय 4%. हियर वी आर एट अ लॉस, एंड द लॉस इज नाउ how much? 4% gone, $4 lakh on 10 million. Interest payment 45,000. So यहाँ पर hedge fund will pay IB try to understand this again. Try to understand. Please understand this, that in equity swap there are two parties. One is an investment bank, one is a hedge fund. Like how I call unregulated insurance to credit default swap, I call here landlord-tenant relationship. Investment bank will invest money on behalf of hedge funds. Point number one. Point number two, capital will be totally of investment bank. Point number three, hedge fund will pay them interest. In our case, it is $45,000, whether there is profit or loss. Point number four, if there is profit, investment bank will give it to hedge fund. In our case, it is $6 lakh. and they take the interest $45,000, so net returns are $5,55,000. Fifth point, if there is loss, investment bank will not bear the loss, loss will be borne by hedge funds. In our case, it is $4 lakh. So $4 lakh and $45,000 fixed interest commitment, $4,45,000 are paid. So what are the takeaways from equity swap? Equity swap, the takeaway is profit is given because it's an equity based performance swap, but loss is borne by hedge funds. Bill Clinton's son-in-law, Eaglewell Partners, hedge funds became insolvent and closed down. This is not very easy job. Easy तो कुछ वैसे भी नहीं होता है. But please understand this. Remember this. Apply this. So when you read equity swap, ये बात ध्यान रखना. Hedge fund pays interest, profit is given by investment bank, and loss is also borne by hedge funds. बहुत ही सिंपल चीज़ें हैं, इसे सिंपल ही रखना है. Credit default swap, unregulated insurance, equity swap, landlord-tenant relationship. So that's how we sum this up. Thank you very much. So now we meet for interest rate swap. What is credit default swap? Unregulated insurance. What is the relationship in equity swap? Landlord-tenant relationship. Now we come to the third swap, interest rate swap. Why it is required? Let's understand that, because it's equally important to know ये क्यों चाहिए, क्या ज़रूरत है इसकी. For this, I will like to take a very simple example. There are two friends. They go to hotel. It is not necessary that they both will order pizza. One will order pizza, one will order masala dosa. Choices are different. Many times choices are same, but sometimes it can be different. So there are two different choices. In this case, there are two parties. They borrow same amount of money. Principal amount borrowed is same. Yes, that's a catch. Principal amount borrowed is same. But they have different choices. One borrows at fixed rate of interest, another borrows at floating rate of interest. Yeah. So let's keep that discussion this way, that in interest rate swap, there is A, there is B. I'll call him borrower 1, we call him borrower 2. He borrows from Citi, he borrows from HSBC. What is there? Here is floating interest rate he borrows, and he borrows at fixed rate. So interest rate swap, something you should know is, in beginning, that there are two borrowers. They borrow from same bank or different banks, but what they borrow is same amount. But rate of interest is different because methodology is different. One is borrowing at floating rate, another is borrowing at fixed rate. This much is clear. This much has to be clear to understand. So as we can see, there are two borrowers and both are borrowing same amount. Let's put some amount also to understand it, so it will be better. Say assuming here they are borrowing 1 million. ये हमेशा ध्यान रखिएगा, interest rate swaps Whenever it operates, please remember principal amount is same for both of them, whatever they borrow. Even banks can be same. What will be different is floating rate and fixed rate. That is there. But so what we have understood in interest rate swap? There are two borrowers, there are two lenders. We call Citi lender 1 and HSBC lender 2. That much is clear in our mind. Don't mix it up with 4 parties, 5 parties, no. There are two borrowers, two lenders, that's all. Borrowing same amount, and please understand, it can be same bank, it can be different bank, and the thing is that one is having floating, another is having fixed. That's it. Why I have kept separate banks is for a better understanding. Now I erase this. Now a bit of terminologies. We have understood what we have to understand, a little bit of terminologies. When I introduce you to the terms, I also want you to know the full forms. There was a term, now of course due to scandal this has been scrapped, LIBOR. It stands for London Interbank Offer Rate. London Interbank Offered Rate. Then there is a term, Euribor. Euribor means Europe Interbank Offer Rate. Next term I want you to introduce is Ionia. Euro Overnight Index Average. These are the rates available in markets. Rates, different rates which are declared in markets. Sonia. Sterling Overnight Index Average. Then there is MIBOR, Mumbai Interbank Offer Rates. Then we come to the most important one which has been now in demand, SOFR. 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 And that's the rate which is called secured overnight financing rate. Secured overnight financing rate, that's called SOFR. So LIBOR, Euribor, Ionia, Sonia, MIBOR, SOFR. This is the latest one, SOFR. LIBOR, why it was scrapped, we'll have a separate video someday. It was a scandal, one of the largest scandal that shook the world. It's there on internet also, at many places, but still we'll have a video for discussion there. So SOFR is secured overnight financing rate. Now why I use these terms? Because when the person is borrowing at fixed rate, fine. But when he is borrowing at floating rate, he'll be using SOFR. SOFR plus 1, SOFR plus 2, that's how they borrow. That's the reason why I interrupted and showed you the terms. LIBOR, Euribor, Ionia, Sonia, MIBOR, SOFR. You should be acquainted with these terms. Now let's go back to our basic example. And basic example is where there is A, there is B. Let's meet them again. There is A, who is my borrower 1. There is B, who is my borrower 2. Don't forget there is Citi, lender 1. Also don't forget HSBC, lender 2. Both have borrowed how much? $1 million. Why? Because there is a precondition. If there is interest rate swap, borrowing amount should be same. Do they know that they will do swap? No. This is because their amounts are same, they can now do the swap. Let's understand it. What is A borrowing at? What I understand is A borrows at floating, B borrows at fixed. Fixed rate is 8%. Floating, he has kept his SOFR plus 2. SOFR plus 2. SOFR will be declared for each period. There are 2 periods. SOFR will be declared for 2 periods. Here also there are 2 periods, obviously borrowing mein. And 8% interest here makes things easier for me. Here the calculations are on 1 million, I pay $80,000 in each period. B के केस में we pay $80,000 in each period. In case of A, we need to have the declaration of SOFR. First period, it has been declared as 5%. So 5 plus 2 is 7. SOFR declared is 5. So $70,000 is the interest outflow. Second period, SOFR decreases to 4. So 6. So the interest outflow is $60,000. Now what have we understood in this? There is A, there is B. Both borrow $1 million. A with floating, B with fixed. A pays as SOFR plus 2. In period 1, SOFR declared is 5, so A pays 7%, which is $70,000. 7% of what? 1 million. In period 2, SOFR declared is 4, so 4 plus 2 is 6, so A pays 6%, $60,000. So A ka clarity aa gaya. He is paying 7%. Why 7%? Again I repeat, SOFR plus 2, SOFR declared in first period is 5. 5 plus 2 is 7, $70,000. Period 2, SOFR declared is 4. Change होता है ना, वो तो floating rate है. Floating rate change होता है. 4% plus 2 is 6%, so $60,000. B के केस में is fixed. 80,000, 80,000. अभी तक swap शुरू नहीं हुआ है. ये डेटा हमारे पास है. Understand this. I'm going to erase this, put the next data in the simplified way for our understanding. So what I understand from interest rate swap is, what is my small takeaway so far is one, there are 2 borrowers, fully agreed. There are 2 lenders. Principal amount is same. Principal amount is same. What is borrowed? Fourth takeaway, A borrows at floating rate. अब A fix भी ले सकता है, but A ने floating लिया है, तो B cannot be floating, he has to be at fixed rate. So this much I understood. 2 borrowers, 2 lenders, principal amount is same, and there is Mr. A who is borrowing at floating rate, there is Mr. B who is borrowing at fixed rate. इतना clear है मेरे mind में. इसके बाद I get certain calculations, and those calculations tell me this, that borrowed amount is 1 million. So there is A and B. A will pay in period 1 interest of $70,000 because it is 5 plus 2, and in period 2 he pays $60,000. He pays to, A pays to whom? City. B pays to whom? HSBC. B के केस में तो बहुत ही सॉर्टेड है कि वो फिक्स्ड अमाउंट ही पे कर रहा है. अब ये ध्यान रखिएगा, दिस अमाउंट्स हैव टू बी पेड इरिस्पेक्टिव आप स्वैप करो कि नहीं करो. इसका टोटल आउटफ्लो जा रहा है 160,000 एंड इसका टोटल आउटफ्लो जा रहा है 130,000, शोइंग दैट ए इज स्मार्टर. बट वो आगे स्मार्ट है कि नहीं वो बाद में मालूम पड़ेगा. सो ए के जेब से पैसा गया 130,000, बी से 160,000. Sorry. After this, what happens? Let's see. both are unhappy, खुश नहीं है. They want to be on other side. There is an English proverb, grass is always greener on the other side. A कह रहा है floating में I made a mistake, I should get fixed. एक इधर था floating, अब A को क्या चाहिए? Fixed. B कह रहा है I am also not happy, I am paying fixed, I want to take floating. Present to change to. Both go to investment banks और कहते हैं our problem is this. So fine, if this is your problem, let's solve it. Investment bank says we will charge you. Free में थोड़ी करेगा. And how they will operate? Now they will operate swap exchange. वापस वही word, swap means exchange. So here what happens now is, here is A, here is B, here is Citi, here is HSBC. They are not affected. उनको कुछ नहीं होने वाला है. इनको क्या मिला है? 130, ये आपको पता ही है, मैंने कैलकुलेशंस बता दिए. एंड इनको 160. ये पे करना ही है आपको. स्वैप में रिमेंबर दिस, यू आर पेइंग बैंक्स, यू कैन रन अवे फ्रॉम दैट. अब यहां A who is on floating and B who is on fixed are going to do swap. A agrees to pay fixed rate to B. Let's assume 7%. B agrees to pay A floating. Now that is not required कि SOFR plus 2 ही आएगा. B says I will pay SOFR plus 1 which is agreed by A. अब ध्यान से देखना. What will A pay B? 7%. What will B pay A? SOFR plus 1. What was A originally paying? Floating. What was B originally paying? Fixed. What will A pay now after the change? Means further fixed. What will he receive? Floating. What will B pay? Floating. What will B receive? Fixed. So अब क्या हुआ? आप बैंक को तो पे कर ही रहे हो. बैंक को तो आप पे कर ही रहे हो. But let's understand this. Let's understand this. How you are going to deal with this now? तो यहां पर आप ध्यान रखिए, A पीरियड 1 और पीरियड 2 में पेमेंट करेगा और रिसीव भी करेगा. हाउ? पीरियड 1 A will pay B and A will receive from B. Period 2 A will pay B, A will receive from B. A पे क्या करने वाला है? A is going to pay fixed 7%. So can I say $70,000? बिल्कुल. In both the periods. And what is A going to receive? SOFR plus 1. What is SOFR in first period? 5. 5% is the SOFR in first period. SOFR plus 1 will be 6. So A will receive from B only $60,000. And in second period, it's only 4. So he will receive only $50,000. So please remember this. What is happening is A will pay 70 because 7% committed है. A will receive 60 because SOFR plus 1, 5 plus 1. Period 2 में A will pay 70, 7% committed है. Receive 50, SOFR plus 1, 4 plus 1, 5. Period 1, B. Now to this is easy. He will receive from B A 70. B will receive from A 70. He will pay A only 60. Period 2, again he will receive 70. And what is he paying? 50. How many numbers you are jumbled with? A is paying B also, A is paying city also. A is paying B also, A is paying city also. A is receiving from B and B is receiving from A. I want to make things more and more easier because these are number games. Okay, what is happening in swap here? I am deleting the data of the bank because that is done with. So let's understand once again what is happening with A. A will pay city and A will pay B. A will receive from B. I want you to understand this first. This is very, very important data. Please remember this. This is going to count. A will pay city. A will pay B. So A will pay B how much? He is paying $70,000. A will receive from B in first $60,000. And how much is A paying to city? That was, I think, floating rate, and that was 5 plus 2, SOFR plus 2, 70. This is in period 1. Net क्या आ रहा है? Pay city 70, pay B 70, 140 paid, 60 received. 60 received, 70 plus 70, 40, and received 60. So A will finally in period 1 pay 80. Paid. Barabar? Understand this. A in period 1 is paying city 70, paying B 70 and receiving from B 60. So net 70 plus 70 is 140 minus 60 is 80,000 paid. Done with that. Let's understand for period 2 for A. Let's understand for period 2 for A. Then we'll draw that again. In period 2, what will A be doing? A paying to city, again 70 or 60, I think. In second period, I think so far goes down to 4. A pays to B, 7% fixed. And A receives from B only, I think, 50. Again, if I see net, this is paid, this is paid, this is received. 130 paid, 50 received, again 80. ये ध्यान रखिएगा. Both the times A is paying 80, so that means A is actually paying fixed. Understand this again. And let's understand in a very clear manner. A in period 1 and period 2 is net paying 80,000. Net. Here also net. How much is he paying? 80,000. So basically, A is bearing the brunt. He is paying 160,000 in 2 periods. What did he originally pay in floating? He was paying 130 to Citi. A has incurred a loss of $30,000. A ने ये स्वैप करके स्मार्ट प्रूफ नहीं किया. He was smarter when he was in floating. By shifting, he has incurred a loss of $30,000. Let's see for B. Let's see for B. Definitely B has won because swap में if A is losing, B has to win by 30,000. And if A is winning, B will lose by 30,000. Remember this. So here it goes. Let's see B. P1, P2. What's happening? And what was B paying? B was paying to HSBC 160,000. 80-80. Period 1, what is happening with B? What is happening with B is actually paying HSBC 80. Right? Then B is paying A 60 because so far is 5 plus 1 is 6. And B is receiving from A 70 because 7% fixed में swap हुआ है. So 80 plus 60, 140 and 70, he is actually paying only 70,000 paid. B is paying HSBC again the same because he was in fixed swap, fixed interest. B is paying A now kamti because so far dropped to 4. 4 plus 1 is 5. And in the third stage, B will receive from A fixed 70. 130 paid, 70 received, so B pays 60. Now what is B paying total? B is paying total 70 plus 60. B कितना पे कर रहा है? 130. B कितना पे कर रहा था? अभी कितना कर रहा है? How much has B gained? Profit $30,000. A का लॉस कितना था? $30,000. In interest rate swap, please remember एक का प्रॉफिट दूसरे का लॉस, दूसरे का लॉस पहले का प्रॉफिट. Understand this. Interest rate swap is nothing but simple terminology. Two different rate or two different pattern of borrowers bring this. But एक condition हमेशा याद रखना, principal amount of borrowing has to be same. So takeaways from interest rate swaps are that there is simple rule, same principal amount. One is borrowing at floating, another is borrowing at fixed. Both go for a swap. One wins, one loses. That's part of the game. So I hope you will understand this video. Thank you all very much.
Found this session valuable? Hit the like button, subscribe to our channel and tell us in the comments below what topic we should dive into next.